My name's Ian Hayes. I'm from Equipment Services. We trade under the name RMD Kwikform. I'm a divisional ops director, a member of the divisional board, and as Adrian alluded to, responsible for, I think the phrase was, an eclectic group of countries. Look after 10 countries which are in the Far East, Europe, some new operations in Central America, and our activities in South America, and exports that goes out of most of those territories to neighbouring countries as well. So I don't spend much time in one time zone, I don't spend much time at home, so it's nice to be here, even though it's very cold in this room. My background's from within the construction industry. I've worked in the sector for 25 years. Previously, roles as a contractor. A first period with RMD in the 90s, when I was a young, naive engineer. Then left. I went to work for another material supplier in the UK and across Europe, and then rejoined in 2007 into this role. Picked up my passport and haven't been back since in reality. So I'll split this morning's presentation into several areas. One, really to give you a bit of a flavour for what we do in RMD. We're a great business. There's always a lot going on. We're in lots of countries. We're usually at the forefront of most construction that is happening. And we have some interesting relationships with some very good customers, and we have some difficult relationships with other customers as we go through difficult projects. So I'll tell you a little bit about that, also the aims of our business, and then the review of the 2012 performance compared to where we were in 2010, and some views on where we think we'll be in 2015. So I'll be happy to take questions at the end, which hopefully should be in about 20 minutes, something like that. So do I have your permission? I'm just conscious that I'm the last here, so you've seen lots of faces, so are you all still with me? So, what do we do? What do we do in RMD? I know some of you, or probably a lot of you, will know about us, but for those that haven't heard of RMD, the Equipment Services Division of Interserve, we hire and we sell equipment to contractors or to clients, or even to members of the public in some markets, to assist them in generally some form of a construction project. There are other things that we do around the margins about helping and services that we offer, but generally it's construction or refurbishment related. Now, there's a question and answer session later on where I ask you some questions to see how much attention you've paid, but we use two types of equipment, formwork and false work. So I hope you're making notes now. Formwork is the material that forms the concrete shape. So generally where wet concrete is poured, a mould has to be put in place to form, whether it's the floor, whether it's a bridge, whether it's any sort of column shape or anything. And that's what's called generically formwork. And then the items that hold that in place are called false work or shoring. False work if it's a wet concrete application, shoring if it's a refurbishment project. And with many different systems, generally people would class our systems as a Meccano type systems, so a lot of interchangeable things, but we will design them for generally unique applications on most projects to try and get the best value for everybody. So a few examples are shown on this slide, and if I could first of all just draw you to the top left, that's put there really to try and demonstrate what formwork and false work is in its simplest form. So here you see the vertical components, which I could tell you all the benefits of an aluminium propping system with quick strip release, tilting bases and tilting heads, but you're probably not interested in that. And I know Tim is definitely not interested in that. But in its simplest elements, that's a prop, and that is false work, holding a deck in place. This is an aero deck system, which is an aluminium panel system with a timber plywood at the top, and on top of that's concrete. So pretty much standard. Every company would do something of that version. It was done in this room when this construction was built. That's how this ceiling was put in. It's how the floor below was put in. So really to try and describe false work as the supporting items and formwork as the area next to the concrete. But then looking at a couple of the other photographs, so in the top middle, you can see here, this is on the mosque project in Mecca, as is all of this sweep down at the bottom, a sort of a broader view of not all of the site in Mecca. At the top you can see specially fabricated steel formwork, which we've sold to a customer to form fairly unique shapes as the concrete is poured. And then down here we've got lots of photographs of this, sadly I haven't got for you, but you can see probably 50% of the systems that we use around the world in play on this project in many different types of application and in many different types of needs that the customer had to build in a different way. And then in the centre, And to the right here, you see the cruise terminal building in Hong Kong. Here's a picture pretty much of a regular site and the contractor's laydown area where we try to help them tidy up to keep the equipment under control from their point of view. But again, different parts of our equipment in there. But here you can see the cruise terminal building taking shape. That's had about 3,000 tonnes of equipment on it over the last couple of years. And I should have said that the project for the mosque has had 15,000 tonnes, our biggest project, 15,000 tonnes of equipment on it. And that project continues for the future. And in Hong Kong, this is a building on the old airport. Those that have been where you used to go in and turn right on the plane and then land, that airport's now gone. It's a docking area for 12 cruise liners for cruises around the area, and it's a building 300-400 metres long to enable the passengers to get on and off in reality. So a lot of activity going on. So I'll be asking questions about which items, don't forget, we'll come back to. So a little bit about our aims as a business. We do aspire to be the best formwork insuring company in the world. We're very vocal about that. We talk to that about our customers, with our customers. And it's all in the eyes of our customer. That's what we want to see. We want to be renowned as being the best at what we can do. Our businesses are market-focused, planning and reacting to local opportunities, supported by a divisional team based in the UK, but with providing services from several of our hubs around the world. Those divisional teams bind the operating companies together to operate accident-free, to live our values, crucially to be market-driven, very responsive to the markets, quite a quick reacting situation we find ourselves in. And in the countries where we do operate, to seek to be in the top 3 by revenue of each of those operating markets. In addition to customer feedback, we are focused on various key financial targets, and we review each market on that basis. And an important part of our operating model is our ability to react to those opportunities when they arise. Usually these are through our export teams, and we'll probably have activities in another 10 or 20 countries at any one time over and above our normal operating base. And our export teams give us the capability to deploy our business quickly, to generate some revenue, but also to then investigate potential new markets. And I'll come on to a couple of those later on, which is how we've got into some of the newer areas over the last few years. So if we stand back a little bit from the actual mechanics and the results of the business and try to look at the drivers of what we do. This is a photograph a few of you might have seen from a year or two ago. It's the Yas Island Hotel in Abu Dhabi. Probably seen on the Formula One racetrack if anybody watches Formula One. And you'll see here a fairly unique requirement, which was after the original hotel was designed, the client decided he wanted to put this steel and glass shroud over the top of what was already a hotel that was virtually complete. Our customer, the contractor, was delighted to have the challenge, didn't really have a clue what to do, came to us, and we at the start didn't really have a clue what to do. But the way our relationships work with our clients is that we put together a team of people using our 3D design software. And the challenge was to support 900 plus individual node points of all of this steelwork in place until it was all bolted together. Because only when it became bolted together did the thing actually support itself. Probably our most unique solution that we've done, one of the most engineering complex projects, something where we've added a lot of value to our clients, and that value add is key to what we do. We also added some value to our own business as well through the revenue that we generated on that project. But it's an example of one of the areas of value add where design can produce unique solutions. We have to, we design probably 70 or 80% of our schemes will require us to design our equipment to be put together in a specific way. And it's at that stage that we'll be looking to try and maximise the advantage to the customer through labour saving, through reduced weight, through spreading the load in different ways, to give them overall lifetime savings on the project. Because it's not just about the cost of the equipment, it's about the total programme, manpower and material cost. And we're always seeking to exploit that advantage through a unique design. The result on this occasion was a happy customer, an excellent project and a further enhanced relationship. Other examples of how we add value are through our logistics, our ability to deploy our equipment. I'm going to talk a little bit about utilization later on and about how we've moved our equipment to growing territories away from reducing territories. specific product advantages that we've designed into our products, which we can then use in the discussions with clients, and our ability to understand what the client needs. Quite a lot these days, and I find myself now as I get a little bit older, some people will come to site and they're perhaps quite more inexperienced than we all used to be, and need as much help as they can to understand how to build their projects. And the relationships that our people form is really crucial. It's at the heart of what we do from a revenue-generating, sales-orientated business. That sort of relationship where we hope to build the dependency from the client on us is crucial in what we do. What I'd like to show you in a moment is a short animation, just really to keep you awake as well, show a different media, but also to further demonstrate where we add value, because it is in these areas that we do have advantage, and we have to win all of our projects against direct competition. We have very small projects, very large projects, and we have quite a short visibility of our future workload. So we are actively winning projects every day, and I think, as it says here, we've got about 3,000 projects on the go at any one time around the world. But this was put together using our own in-house team. We do animations and things to support our projects, to help the customer to understand the offer that we were making, this one being in the USA. And it's for a system called Paraslim, which is to assist the client in how they put parapets on the edges of bridges. So if we could we just play the animation, please? So that went alongside a sales presentation around the benefits to the clients. I won't go into huge detail for you, but there's a huge amount of benefits there for them from a safety aspect of not requiring any access underneath that bridge. Very crucial in today's requirements where a lot of risk is on projects. Where, again, that was over a live road, so there were no closures needed other than to actually erect the equipment overnight, one night. There were no long-term closures by having equipment on the floor. We've had that system, which was invented by one of the engineers in RMD. We've had that system now for about 15 years. People have copied that, and we've produced lots of enhancements to that to enable people to actually pour the concrete flush with the surface and not have the problem with clashing with the areas that sort of it attaches to. We now provide safety systems on the side through guardrails. We actually pre-assemble that equipment, and we take that equipment to sites on trucks for the client so that they just lift that into place. We capture value by charging rental from when we start to pre-assemble that equipment in a yard, because we're providing that service that the client doesn't now need to. And if the client's a little bit delayed, then we get the extra rental whilst it sits in a yard. But we're taking away the difficulty for the client on usually quite congested sites. Obviously, that looks like it was in the middle of the countryside. But from a skilled labour point of view, we can actually offer almost a factory-fitted service where we can do this repetitively and quickly, whereas the client could spend a lot of time trying to do that. So there's a whole sales presentation goes around these things, and it's just really to show how we add value. Because on quite a lot of our projects, if we don't add value, we don't win. There's a certain sector which is relatively commodity-based, which is relationship, availability, location. But on projects such as this, and on many of our projects around the world, we have to demonstrate where we're adding value to our business. So moving on with that theme of adding value, and of the drivers of the business, we've talked about value add. Now talk a little bit about utilization, which we define as the value of equipment on hire divided by the value of the equipment in total. We use utilization as a lever, but we combine that with pricing and margin levels for performance. They're an important group of levers to combine. It's not a blunt ship that just drives one way or another. We do focus on moving equipment to maximise the utilisation around the world, but we have to balance that with the attractiveness of the pricing level, the risk on a project, so understanding what those projects or that country might give for us, and really the expected duration of that equipment in that territory. We don't win any prizes for moving equipment from country to country every few months. That just burns cash. But we do move equipment as we seek to deploy it strategically. So a combination of utilisation and margin, and also markets and competitors are obviously part of our competitive dynamic. Naturally, the level of construction activity in a market is a major factor of the volumes and competitiveness that we experience, and we've experienced some tough times from 2010 into 2011. Internationally, our two main competitors are Austrian/German companies and that might be one of them on the phone now. We do have that thing though, isn't it? £500 in the pot for every phone. Yeah. It'd probably be an Interserve person. So internationally, our two main competitors are Perry and Doka, German/Austrian companies, very much manufacturing business initially, very good companies, and we compete with them in most markets. But in every market that we trade in, there are then many local competitors. So every market is relatively fragmented at the local end. With our main competitors, as I say, they are good businesses, but we come from different backgrounds, and therefore we have different strengths. Whilst we all compete in each sector, RMD's history has mainly come from a focus on infrastructure projects, whereas Perry and Doka has come from a commercial and multi-storey background. And you can see that strengths come to play in the type of products that we offer, although we have all filled the gaps in any product range. We lead some markets in market share, and in others we follow, but we always do seek to be in the top three. So, on to some numbers of performance, and looking back to 2010, where we didn't realise it was going to get a little bit worse, perhaps, or as worse as it did get. But in 2010, we were yet to reach our low points, but as markets were continuing to deteriorate, both in 2010 and into 2011. Our performance in 2010 can be summarised there with our EBIT number, our utilisation, and we've shown our margin numbers. These are all publicly available and has been in the accounts. Since 2010, it's been a difficult time in some markets, which we did see coming. And we believe the low point for us was, as Adrian said, the H1 2011, which was at a lower position than the end of 2010. Since then, we've seen a gradual improvement overall, but with continued difficulties in some regions. At the end of 2010, we were into the European recession, and major projects like the Yas Island photograph that I showed you before, which were generating significant revenue, were coming to an end. And since then, obviously, we've had the Arab Spring, which has had an impact on our export activities, mainly in the country of Libya, but through our Middle East export activity, that affected us a lot. We had some further market contraction in South Africa, and our outlook was to expect growth in the Far East and Australia. And we just purchased our US business. So at the end of 2010, looking forwards, we saw some difficult times ahead. We had some management actions that we put in place, which I'll talk about on the next slides, which became even more important as markets continued to decline into 2011. But we did see some optimism around Asia and Australia. So where do we stand at the end of 2012? So our revenues increased by nearly 20%. Our EBIT is up by nearly 12% compared to 2010, but further up compared to the low point of half one 2011. Our utilization's increased to 44%, which is a third up on where we were, and again, slightly more compared to the low point. The management actions that we've put in place have provided the benefits to our business, which are now coming through. We've been transferring equipment, and for instance, in 2012, we transferred £41 million of equipment from territory to territory to deploy that in markets that needed the equipment and away from markets which have less need for it, which are either contracting or where the mix of equipment has moved. We've been exploiting the opportunities in Saudi Arabia and developing the wider business in that country, in addition to the mosque project, which continues to provide good revenue and good outlook opportunity for us for future revenue. We've significantly reduced the cost of our European businesses, which is something that's part of what I've been doing, to bring that more in line with the market conditions, and also to drag through now that sort of extra contribution to our P&L. We've reorganised South Africa as well at the same time, and have seen some good progress there now, and it's a profit contributor now. And in half 2012, we've started to see some price growth in USA, which has been good to see, and part of a very stringent management programme that's been put in place to target that following reviews earlier in the year. That's combined with a little bit of volume growth that we're starting to see towards the end of last year. Also during the period, we've identified and implemented some new opportunities, new geographies, as part of our overall growth, which I'll talk about on a later slide, but all of which, in addition to product development, have added to our performance for 2012 and our outlook into 2015. What I'd like to do now is just broadly, by showing you a photograph, Rich, just broadly touch on 4 of the main regions and give you some comments about the specific markets. So here's a more detailed photograph of the mosque in Saudi Arabia, and really for a Middle East set of words around our current performance. That overall, across the whole of the Middle East, we've seen some signs of limited growth during 2012, but we still see many delayed projects, obviously very similar to the way that George sees it in his territories. In Qatar, the momentum continues towards activity growth, and we have seen a little increase ourselves towards the back end of last year and the early part of this year, relatively small. But we do expect to see increased projects awards for our customers towards the end of 2013, with the expectation of revenue growth during 2014. Saudi Arabia continues to be a great market for us, with a lot more potential both across the wider country as well as on the mosque. Having said that, it is probably one of our most difficult difficult countries to operate in, with some very difficult sets of environment for our people and the way that construction is done in those markets. But a really important part of our business going forward now. And then next, Europe. This is a photograph of an export project in Europe at the stadium in Marseille. You can see the towers here are what we call RMD Megashore towers, where each leg of that tower can take 100 tons of load. And if you think in old terms that a mini car, before it was beefed up recently, but the old mini used to it weighs a ton. So if you can think that each of those legs has the capacity to support 100 minis across each leg, you can see why it's capable of supporting the roof of the stadium whilst it's put in place. And that's an example of how even during these times in Europe we've managed to take advantage of export activity. I think Europe, the difficult market conditions continue, although we've seen the benefits of our cost reductions coming through into place. In the medium term, we do see some improvements in the UK with HS2 coming through. The stations for the Crossrail projects, which is where we start to get some revenue coming through probably end of this year, but over the next 2 years. Some road projects, contrary to the comments we heard earlier on, there are still some road projects going on, and we see them coming through. And offshore wind generation has an opportunity for us to really take part in a growing sector. Probably might be some demonstration projects this year or next, but probably 2 to 3 years away. But they are significant concrete manufacturing issues, and wherever there's wet concrete in large quantities, there's generally some RMD equipment somewhere. From an export perspective, we've been successful in targeting specific projects, e.g. this in France, but also across Scandinavia. There's quite a lot of projects we have in Scandinavia. More so, mostly in Norway, I'd say. A lot of road projects going on there. And with a partner, we've also entered the Polish market, and we probably did 6 or 7 projects there last year. And we will do more again this year. We're awarded one about 3 or 4 weeks ago, which should generate a significant amount of revenue for this year. But we see the general European outlook continuing in the same way. But from an export point of view, we continue to try and be fleet of foot to allocate our efforts to those opportunities. Then in Australia and the Far East, this is a photograph of an Australian project, the Brisbane Superhighway project. And again, you can see here the RMD equipment here, which again is Megashore, but super slim soldiers there, aluminium beams, a whole series of things that we will provide to provide a solution for the clients, obviously needing to support these precast units whilst they stitch them together to form the bridge. There were multiple of these sort of pier heads across the whole of the project, so it's a very big project for us. Australia remains a good market, very good market for us, but as you know probably more than me, seems to be a twin-track economy with mining and LNG activity strong, although we are starting to see a slowing of some investments. But normal domestic activity across Australia are quite weak. We've supplied several large LNG and mining projects, but have seen a couple that we expected to come through this year cancelled. So that's Browse and Roxby Downs for BHP Billiton. So that we're starting to see that sort of market either harden or soften in whichever way you want to call it. But having said that, there are 2 other projects in the early stages which we do expect to come through to market during 2014. An LNG tank is almost like the perfect project for an RMD business. It uses so much of our equipment and gives us the opportunity to provide advantages to the clients, benefits from our systems, and good revenue for both the client and for us. So he saves time and effort, and we make good revenue. Across the Far East since 2010, we've seen good growth, and the outlook for rail, road, and other infrastructure projects in Hong Kong gives really good optimism of our performance. There's a lot of activity going on specifically in Hong Kong. We've won some projects for us, but well into the future, which is usually quite rare. So we have visibility of a certain amount of revenue and a considerable amount of activity going on in that region. We've also seen the expansion of the Philippines, activity moving away from just the traditional high-rise apartment sector, but into malls, mining, and offices. And we've seen a growth in our Philippines business over the last 2 years as well to be a significant profit contributor. During the period 10 to 12, we've taken the opportunity to establish our business in Singapore, which is already making a positive contribution. And again, we see the type of construction activity going on there for the next 3 to 4 years being really the type of work that we do, and we're growing our business as quickly as we can. And then the last of the photos, the Americas. This is a photograph of an aluminium outshore system and a few other products in there on a water plant in Albuquerque. During the period in the USA, we saw slower than expected growth from 10 to 12 than we'd expected, but we've integrated the business well and consolidated and got our procedures and processes in place. During the second half of last year, as I've said before, we saw pricing levels increase and market volumes and activity with some early signs of growth. We do see great potential from this business for us, the scale of the business as well, and are pleased it's now making a positive contribution to the divisional performance as a whole. Elsewhere in the Americas, the Chilean business has grown strongly. We've added 2 branches to capitalise on the potential there, as well as starting export activities now into Peru and Ecuador. We've also entered the Panama and now Colombian markets with local partners. Adrian mentioned a little bit of this at the start. So we're doing this with local partners as a low-cost startup where we provide equipment, but they're providing logistics, offices, people, resources, credit issues, debtor collection, etc. And we share revenues and profits in a specific way. It gives us a chance to enter a market very quickly, generate incremental revenue with our equipment that we're trying to deploy to get good margins, whilst we then also get the opportunity to investigate those markets ourselves for future expansion and perhaps starting our own business. There's good potential in the region, Panama and Colombia. Specifically for Colombia, for instance, with a $55 billion program of infrastructure projects has already started and will continue going forward in the Colombian market. So the outlook to 2015, just a couple of slides to go now, is that we see our margins returning to our traditional sort of circa 15%, with a growth in utilisation to the 50% range. And the circa there is because we do this, we balance the pricing, we balance the margins, we balance the utilisation to get the best result for us, as well as the longevity in a market of our transfer actions. During the period, we expect to see growth in the Middle East, particularly in Qatar and Saudi Arabia. Perhaps Qatar half to 2014 into 15, depending on how it goes, might be a little bit earlier. Saudi Arabia throughout the period we expect. Across Australasia, the Far East growth will offset some reduction, perhaps in the Australian markets, with that sort of slight softening of investment in LNG. Only a really modest recovery in Europe. Our management actions that we've put in place to reduce our costs have been the sort of plank on which we've changed our European business, and we're only seeing a very small upturn in activity. Pricing level growth, we see that continuing in the USA as volumes increase, and that's a good outlook for 2015. Overall, in many markets, we do see infrastructure potential, and that will lead to some fleet investment. Having been a net minus on CapEx for the last 2 or 3 years, we're now be starting to invest again in our equipment, but still using utilisation to minimise that investment, depending on the type of product and the location. And we do expect to see growth from the new start in Colombia. We've also opened a business in Iraq. We have other export activities and a couple of other countries on our radar at the moment, which is perhaps just a little bit too soon to tell you about, but very much in the low-cost startup mode, seeking to exploit potential from them through to 2015. And so, in summary, our outlook is based on client relationships. Our revenue comes from how well we work with our customers, so we're going to build on that and look for new opportunities, be they in new geographies for businesses that will start, or in new geographies where we can have export activity and we can get in and get out and support clients in those projects. Identifying and capitalising on those new opportunities is key. It's that fleet of foot that we're renowned for. And continuing to optimise the deployment of the fleet to get our utilisation up to circa, or more 50%, to get our pricing strength and drive our pricing levels, hopefully with our competitors and our customers in the market, and to get back to our medium-term trend of 15% historic margin. So I trust that's given you a flavour of what we do. I've tried to sort of mix it up a bit by talking about the project, so it's not been the same numbers and same commentary all the way through. Happy to take some questions in a moment, but I'll hand back to Adrian.